There's nothing that's going on in the market right now that raises any concern, while recent labor market indicators point to a slowing in job growth, especially among smaller businesses. A full recovery is unlikely until people are confident that it's safe to re-engage in a broad range of activity.
There is no way I'm going to make you listen to that blah, 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 blah. Fed Chairman Powell. All right, let's start this over here, taking a look at the markets after the FOMC has met, after Powell has concluded his press conference, after the close today. Closing bell just a few minutes ago. We're looking at the S&P up 1% on the day, and it is hitting our price target, it is heading towards our 33.20 resistance and or take profit area that we're looking here, closing the summer up. Then perhaps let's see what happens if we're able to reach this area. I'm going to extend this trend line for everyone today. I'm going to extend this. Now watch what happens in Asia, by the way. Asia and London, if we could see a reversal here, just watch out for that. After FOMC day, you always have to watch out for the Asian Open and see where they take it. Now you can see over here, this area, this trend line coming into the resistance at 33.20. That remains our take profit area, and where we're looking, as you can see, that's towards the top of the channel. It also has some horizontal resistance in there. Now, whether or not it's the first resistance area over here, this trend line resistance, or the one above it. And you can see over here, if you just raise this resistance over here to more towards the top of this right there, the top touches over there, that's going to wind up being the top channel. Either one of those will be where I think we peak out for the time being and then go back into further consolidation. Now, how quickly we get up there, we'll see. Tomorrow's Thursday, Friday. We have 2 days left this week. Let's see. Markets are on a very, very risk-on tone over here, as Powell has basically said he's going to do whatever it takes to support the markets until it has recovered from the current situation. They say caused by the coronavirus. We know caused by the banking system, which back in September started running into problems when they started doing the repo purchases and continued. Let's take a look at what else is going on. We see the NASDAQ up also 1% on the day, possibly breaking out of this, what looks like a possible bull flag developing. I would thought maybe we would see actually a further extension down, maybe before breaking up. We're breaking up right now. If we clear above this resistance right over here at 10,763, you can see the touches over here and over here. That should signal a good possible attempt at new all-time highs on the NASDAQ. Of course, the Dow continues to lag, up only a 0.5% today, has still not taken out June highs. So we have the NASDAQ trading at all-time highs. We have the S&P 500, which continues to make higher highs than it did in June. And we have the NASDAQ making new all-time highs. So if we could get another index, for example, the S&P starting to make new all-time highs, which if you're not thinking that's possible now, this year, you're not paying attention, as well as maybe the Dow starts taking out the June highs. It's going to be, let's see what happens. Let's see what happens, whether or not the Dow is able to really go ahead and even get close to new all-time highs. The Dow is weighted a lot different than the NASDAQ and the S&P. S&P is really just turning into a tech holding, by the way, and NASDAQ is that. If you look over at the dollar, and this is all a dollar story, dollar continued to get punished today, even after the Fed. There was an initial impulse. This is why you can't get whipsawed around. You have to understand what's going on at the Fed. Here you go. During the press conference, you see that whipsaw right over here. Let me highlight that area on the DXY. That's why we don't trade small time frames. Look here on the 8-hour. It's very controlled over here. Are we peaking out tonight? I'm trading the Euro US dollar still over here, long over here since this morning. If we're going to get any type of reversal, I've moved my stop loss over here. I've moved my stop loss now to break even on this trade. If we get below this trend line over here, and you can see this trend line over here that I'm highlighting with my mouse, this is the parabolic trend line. If we start trading below that and below this, then we could see some type of consolidation into this trend line over here at best, before trading back above, or perhaps even further into this trend line. Right now, that dollar weakness continues, and you could see gold taking advantage of it. Gold touching all-time high once again, still below that white line. If you cross that white line, watch out. Gold could continue putting up some beautiful gains over here. Silver also consolidating. It peaked above the 2450 resistance over here, back down again, very volatile, shaking out a lot of paper traders over here. Margined paper traders are getting probably wrecked. That's not how you do it, folks. What's going to happen over here? I don't know. When I say I don't know, I mean we're into a resistance, right? Until we get a confirmed breakout above, retest and resumption, not looking to go long on silver, period. What happens if we trade down? What happens if we have retest this support over here after we had that 15% drawdown? Would that be a place to look to position into silver in a bull market? And we're in a bull market? Absolutely. I do think so. Bitcoin, I want to look at with you, which is we looked at this morning in the live stream. We were looking at this trend line I have over here and how it's coming into play. I want you to see, I cloned this trend line over here. I placed it over here, right? And it's just, I love fooling around and doing interesting stuff. Happy to share it with you. Speaking of which, something I wanted to share with you today, as I was looking at this, I've shared several weeks ago this chart with you as well. This is people who have been holding Bitcoin for over 1 year. This is as we start looking forward 18 months to when the bull market's ending and we want to get out. This is one of the signals that we will watch. Why do I say that? Watch over here. Come with me over here as Bitcoin starts trading above 50 and then up to 60%. Once 60% of people, all right, 60% right there. Once 60% of people holding Bitcoin have been holding without moving it for a year or longer, that's when you could see the bull market begin in Bitcoin, right? Now look over here as we have approached that 60% right here. This is when I brought it to your attention. As soon as that came to 60%, going back over here, this is in June the 1st. And since then, that's when the bull market of Bitcoin really starts. So you're seeing right now some on-chain information that's helping you scale in and out of long-term Bitcoin cycles as we do. And right on top of it, also from when you're seeing the bottom in Bitcoin, when you're seeing the top in Bitcoin. When you're seeing the top in Bitcoin, you're going to see the people that have been holding Bitcoin for over a year drops from 60% down to 40%. Once you hit 40%, it happened over here in the 2013 high over here, and it happened over here in the 2017 high. You can see over here, let me get down to 40%. We only came down as far as 41. Okay, there you go, 41%, right? You can see over here as we came down to 43%. That was the high. So you're going to have to watch it. You're going to have to watch the price because, again, it's about taking all these different, whether it's the macro, the fundamentals. Why do I say that on-chain transactions are fundamental for Bitcoin? Well, that's what's moving Bitcoin, right? So you could see over here using the amount of people holding Bitcoin for over 1 year. Once it hits 60% on-chain, right? Don't be so square between 58, 62%, whatever. Once it approaches 60%, that's usually where the bottom is in Bitcoin. People are holding, and that's where you see the rise begin. Again, once you hit people holding for 40% or right around it, over here it was 41%. That's the top in Bitcoin. That will be a confirmation we'll use as we're looking to scale out. That's going to be a long time. I had someone say to me yesterday as we just started the Bitcoin bull market on this Sunday, actually on Monday, they're like, are you going to take profit? We're not taking profit for quite a while. We're looking to hold these trades for the duration of the bull market, looking forward to sharing this journey with you. What else do we want to look at before we go over today? We could see that further extension down here of the dollar. It's been a dollar story. It continues to be a dollar story. I just want everyone just to be aware what could happen during Asia tonight, going into London. Look for some sharp reversals. Listen, it is what it is. And what is it? The economy's in a terrible situation. but the markets are booming. The Fed is accommodative. The Fed's going to continue to be accommodative. We've tried now, we have had for quite a long time now, people on the right side of the market, not just in the S&P 500, not just on the dollar, not just on gold, not just on silver and Bitcoin, but all over FX too. That's what we do together. Thank you for being a part of this. Thank you for watching today. If you're still here right now, go ahead, smash that like button. Now I want to get into some charts with you. We're going to start over here looking at gold and the S&P 500. All right, I want you to follow my mouse and focus right over here. You could see in red the price of the S&P 500 crossed the price of gold in blue right here in 1990. Now, since that has happened, the S&P 500 has outperformed gold, returning 7.6% on average year over year. Now, gold, on the other hand, has returned 5.8% over the same time period. Now, look over here. This is in 2008, December, when the Fed started QE. The first time the Fed started QE, you could see asset prices rose. You could see in red the S&P rising and continued to rise, but you can see that gold definitely outpaced the gains of the S&P 500 during this period of time. This is a similar period that we're entering right now. What do you think is going to happen right now? Do you think that the gold is going to be able to continue to close the gap on the S&P 500 over here? And more importantly, which do you think is more risky to own right now, equities or gold? All right, again, I just want to give you some of these Bloomberg charts. This is on Zero Hedge. I find these charts. I want to show you a look at the dollar today. This is the whipsaw that occurred during the FOMC meeting over here, but the dollar now back down towards the lows of its day. You could also see over here, you see gold testing. We looked at that together, testing that all-time high. You could see the pressure continuing to build up. Now, this is something that I do want to look at. This is a chart of real rates, inverted, looking at gold. And right now, in December of this year, 2020, the markets do have priced in negative rates for the US. Now, where is that going to lead gold? Where does that lead Bitcoin? The printers go brr.